Hey, what's going on, everybody? Welcome back to the channel. Excuse me. Welcome back here at Crypto Nation. Hey, if you're new here, it's totally free. Make sure you subscribe and hit the like button for post notification. So this is another episode of Crypto Nation Reacts from the Altcoin Daily. The title of this one is called "The Biggest Crash in History Has Begun." It says crypto holders sell now, but it has the question mark here. But let's see what they're talking about. We all know what happened over the last 24 hours. Bitcoin dipped all the way back down to 60K. A lot of altcoins flash crashed. So let's see what's going on.
Say we are now just moving into the high risk period of a recession.
Traditional markets are failing today as over $2.9 trillion wiped out from stocks this morning due to fears of a global recession, this being the worst day since the 2020 COVID crash. And while this makes sense, we are in the 10th straight quarter in a row of Federal Reserve tightening.
It on average takes 10 quarters after a Fed tightening cycle to dip the economy into a recession. And so that way I agree with you. And this is now the 10th quarter.
Watch today's whole video as Donald Trump is now suggesting using Bitcoin to pay off the country's $35 trillion in debt.
Who knows, maybe we'll pay off our $35 trillion, hand him a little crypto check, right? We'll hand him a little Bitcoin.
Watch till the end, because today, Bitcoin is holding up surprisingly well. It did slump a little, but really altcoins are the ones getting wrecked.
Indeed, we think it could be a painful as we move into the fourth quarter is when our best guess of when a recession starts.
And to prevent this, central banks around the world have started to cut interest rates. The U.S. Federal Reserve this week chose not to. A cut would stimulate the economy. That'd be bullish.
Are we going to look back on this period and say, Fed made a mistake, they should have gone sooner, they could have prevented more fallout?
I mean, I think they should have gone on Wednesday, and I published a piece, a couple of weeks ago that said why wait. So I do think it would have been better to go earlier, and I think now it does make sense to move to significantly lower rates. So I think there is a case that needs to be discussed for going more quickly.
And now, unless an emergency meeting is called, the next meeting isn't until September. Will this be too late?
Indeed, we think it could be a painful as we move into the fourth quarter is when our best guess of when a recession starts.
And why can't the Federal Reserve just cut? Are they crazy? Are they stupid? I mean, what's their goal?
We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone.
Well, it's this sticky inflation. Yes, we're down, but they don't want a 1980s level, 70s, 80s level second flare-up.
This has been the biggest inflation price increase we've seen since the back half of the 1960s. It was not just transitory. It was due to massive monetary fiscal stimulus. And I think the Fed has acted prudent in not cutting more aggressively, let alone cutting yesterday, given the risk to which I think is still a potential problem if we don't have a recession. We think we need a recession to get a sustained shift down in inflation, or we risk potentially going back into something like the early 1970s.
So damned if they do cut, damned if they don't. And if they just wait to cut too long and a recession happens, that would quell inflation. It just would. Yet it would hurt average people in the short term. And check this out. McDonald's earnings paint a scary economic picture. So Mickey D's Q2 earnings show that inflation finally has Americans thinking twice about their fast food binges. The golden arches are looking a little droopy this morning, as McDonald's just reported its first drop in sales since 2020, as economic pressures are making it harder for Big Macs to fly off the grills like they're accustomed to. So early signs of a recession just hit McDonald's.
But then I have 12 other sectors in the consumer space alone that are really, really struggling. Autos, we think there's going to be, we're going to get auto sales today for July. They might be up a little bit from June because of some technical issues in June, but they've been basically flat for the past year. We think auto inventories are at record highs by a wide margin. We have excess inventory in the auto space, and so we're thinking we're going to get a decline in price. That's going to be particularly painful for the auto industry because obviously they just gave big wage increases. So we think profit margins in many, many consumer sectors, from autos to airlines to restaurants, are going to get squeezed as consumers pull back. I love your Hershey example. The price of sweets, of candy, has gone up 22% in 3 years.
Right.
They wonder why sales are weakening.
And with now the unemployment rate growing,
Well, you're starting to see the unemployment backdrop deteriorate. I know the level of the unemployment rate is low at 4.1%, but it is up. It's up from 3.4. It's on the verge of triggering the SOM rule. Second, unemployment claims we saw this morning clearly higher. One of the things I do is I keep lists like you just showed, and there's a growing list of layoff announcements this week. Intel was at the top of it. And then the question is, why are companies doing that?
so if you're a Bitcoin holder, expect volatility at least until the September Fed meeting.
So you think he's going to go 50 in September?
Actually, it looks like now the markets want a 50 basis point rate cut in September, not just 25. Now, to me, this does seem like it would be a little bit aggressive, but we will just have to see what the next few months bring.
No, we still think they're going to go 25 in September. We do now expect consecutive cuts in the remainder of 2024, September, November, December. So we pulled forward 125 basis point cut. I think 50 is a possibility if you get further weakness between now and the meeting and there is another employment report. The case for 50 might be maybe they should have done 25 basis points at the meeting on Wednesday, so they're already a little bit behind and they have to catch up.
And Bitcoin holders, here's what the mainstream media won't tell you, that for the first time ever, Morgan Stanley to offer Bitcoin ETFs to wealthy clients, aka clients with at least a net worth of 1.5 million. I loved this tweet from Anthony Scaramucci. Breaking: Morgan Stanley, the largest wealth management firm in the world, with clients with over $1.5 trillion in assets, just became the first to give their advisors the green light to put BlackRock's Bitcoin ETF in their clients' portfolios. BlackRock's Bitcoin ETF has pulled in a record-setting $20 billion in inflows in 6 months, largely without the $30 trillion US wealth advisory market thus far. So institutional demand for Bitcoin through these ETFs is not slowing down. In fact, the US Bitcoin ETFs purchased over 50,000 Bitcoin in July alone, and now another significant on-ramp has just got the green light.
They think it's good. Who knows? Maybe we'll pay off our $35 trillion, hand them a little crypto check, right? We'll hand them a little Bitcoin and wipe out our $35 trillion.
But how do you...
So that was the full clip. President Donald Trump actually saying, maybe we'll use Bitcoin to help pay off the unsustainable debt. I mean, this is so insurmountable at this point, it's wacky. The only way out is truly to print, baby, print. And this is the dirty little secret that some government somewhere is eventually going to figure out. Whoever prints the most fiat and buys Bitcoin first wins.
I always said that Bitcoin has no top because fiat money has no bottom, right? There's no backing for fiat money. It's just paper. And I think a couple of things we're going to see happening. Number one, people will no longer accept fiat money for Bitcoin. So you're going to try to buy Bitcoin with your fiat money and no one will take your fiat money. No one will take dollars at all. So that will be a moment of panic. They'll be like, oh, what? It's like, no. Here's $1 million. Here's $10 million. I want one Bitcoin. Like, no way, amigo. We don't want that shit. It's worthless. Right? So that's going to be panic. Then people are going to have to trade in other stuff for Bitcoin, like gold, their house, right? And then people are going to be panicked. And they should be panicked because the world we live in now is a fake world that's been created with the hologram of fiat money.
This is an ongoing story. Click subscribe and join the 1.48 million subscribers already, and I will be responding to your comments on the Roundtable app, which has no bots, which has no clutter. Link down below if you want to join the conversation. Responding now.
When you have rheumatoid arthritis.
But there we go, guys. There we have it. What's going on with the market? So right now we have, let me see here. Go back here. Where's Bitcoin at right now? Bitcoin is up 0.4% in a 1 hour. The price is at 61,000 right now, and Ethereum is just under 3,000. So yeah, that's what's going on with the market. But tell me what you think. Don't forget to subscribe and hit the like button for post notifications. That's what's going on with the crypto market right now. Um, I don't know, but I feel that that a major pump is coming. I believe that the big players, the institutions are loading up. Big money's loading up right now. If you guys pay attention over the last couple of years, the market has been flash crashing for the last couple of years, and then eventually it's followed by a pump, right? Just like it did like a few weeks back when we crashed, and then the market kind of pumped again. But anyways, um, that's that episode. I will see you guys in the next one. Peace.